Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is Saturday, September 29th, 2012. Lots to talk about, so let's get started. All right, so I'm going to make this video hopefully as quick as possible. We haven't really changed anything from my previous analysis, so just a quick recap. This 147.05 held up, created this shooting star pattern over here. We since then broken down and then traded within this upper trend line here. I did take a short trade at this candle here simply because we fell back into this upper trend line here. And then from that, it showed me that because they couldn't close it above the trend line, that it did show some weakness. Fortunately enough, it did break down the very next day, and then we broke down again the very next day. However, they saved it right at this bottom trend line here. So if you look at the previous videos, you can see what I'm talking about. Basically, when I say they, I mean institutions or the Feds, etc., whether it be QE3 or Operation Twist, doesn't matter. Basically, the bottom line is they devalue the dollar and they are able to prop the markets higher. Okay. On Friday, what we had was basically a flat day. We created this doji candle here. We held this 144.30 level here, and then I'll show you the intraday pattern on this 144.30 level in a second. Basically, we did break down from this bottom trend line here, just like we did the day before, which was Wednesday. But again, they were able to save it again. This tells me that they are going to make it very difficult for this market to break down from this bottom trend line here. Why? Because once they get a close and a confirmation close below this trend line here, then they absolutely know that the markets could hit this 141.95, and I really don't think that they want to do that, being that the election is in November, right? So it would make sense to me that they would try to keep this market as high as possible until at least that time. Now here's the thing, right? Basically, I need to trade based on what I see and not what I hear, what I know, not what I think. And basically, what's happening right now is because we had this higher volume candle here, which was on this higher volume on this day, which was Wednesday, on a candle that did not signify a reversal. But again, based on volume alone, you guys know that volume is the most important thing to me in my trading. It doesn't mean it's the only thing I'm going to look at, but it's definitely one of the more powerful indications for me that a possible turn would happen. We got this volume higher than the previous 3 days of volume, which also tells me, and you guys already know that that's my minimum. It needs to be 3. In fact, I did say that the day before had higher volume than these 2 days, but then I did say that it wasn't 3 days, so I can't really validate that. But this one was 3 days, which is probably why we got a bounce the very next day. But then the day after, we got even higher volume, which was on Friday, and this volume is pretty much up there. This was at 150 million. Okay, it wasn't much more from this day, which was 146 million. Fact of the matter is, however, it is higher. This is the highest candle so far until this day, which was 154 million. So all these days here, 1, 2, 3, 4, 5 days, this volume was higher, which could also indicate a possible reversal. But the reversal on this, I just want to explain something real quick. The reversal on higher volume and a doji candle is normally after a down move. So what do I mean by that? If this candle here was this candle, meaning if this candle was a doji, all right, and this volume was actually this volume, then I would definitely say, hands down, I'm going to sell my short position and go long. Okay, but right now this is happening after what looks like to me a possible consolidation pattern above this trend line here. But normally when I see that happen, it's building strength to come down and break down from that bottom trend line. And if we do that, these levels here is definitely in the cards in my opinion. However, if you look at over here, we also see some sort of consolidation pattern right above this bottom trend line as well, right? And we didn't break down, we actually went higher. We also had this consolidation, a 2-day consolidation pattern here, which doesn't constitute a consolidation pattern to me. I need at least 3 days, meaning one more day here as a consolidation pattern before a possible breakdown. We also had another, looks like a 4-day consolidation pattern here, and we ended up going higher. And then of course here we had a 1-day consolidation. Well, actually this wasn't even a consolidation, this was an engulfing pattern here. But you guys get the picture, right? I mean, basically We on Monday, if we go sideways again, then that is 3 days of consolidation, which tells me that there might be a possibility we get to this 141.95. I'm still in the 50-50 category here simply because we have QE3, 1, 2, we have a high volume and a doji candle, which could definitely indicate a reversal, meaning a pop back higher. Okay, but we also have this upper trend line and this 147.05 level here that's going to give it some resistance. So if it does go up, what'll happen is I'll get stopped out. This is my stop right here. My stop is a break even. That way, I lose absolutely nothing, like I never took the trade in the first place. Depending what Monday shows me, I may actually take a long position in these markets, as far as they maybe go long the SPY or short the SDS. But we'll just have to see what happens on Monday to get a picture of what might happen. But right now, because we're right on this bottom trend line here, I'm kind of on edge. Okay, let's take a look at the intraday. All right, this is the intraday chart. This chart is a 10-minute chart. I'm sorry, a 10-minute. Each candle is 10 minutes. All right, so this is the start of the day. We kind of just broke down a little bit and traded right around this bottom trend line, and here's where they save it. They saved it, and the high of this candle is 141.31. So again, this level is 144. I'm sorry, so this high candle here is 144.31, and this was 144.30. So I was 1 cent off on this level here. Okay, we had this nice intraday pullback, right? That actually looked like an engulfing candle, or a reversal pattern. This is definitely engulfing. And then we consolidated bearishly, but then this is how I can tell that this market right here is I guess somewhat manipulated. What do I mean by that? Well, we have this up move here and then we consolidate, which tells me that we should have another up move here. But then at the same time, we also have this engulfing pattern here. If we just take this candle straight down, this could be definitely also a bearish pattern here. But instead, they saved it. They brought it above the 144.30 level. They could not hold it there, and it just broke down. Okay, and then from here, after it hit this bottom trend line, they're like, we can't let it close below this trend line. So they popped it up again. The high of this candle is 144.30. I just love these mathematically calculated levels. They just amaze me time and time again. The last 10 minutes of the day, they had a quick sell-off. I think this is because it's Friday. People are just taking profits. It's not a big deal in my opinion. There is definitely a possibility that this guy could go higher. Okay? That's the 10 minute. So the 10 minute isn't as reliable as the daily chart. Just keep in mind the higher time frame is more accurate, or I should say it gives you a better probability than the shorter time frames. With that said, this is the hourly chart, meaning every single candle here is based on 1 hour or 60 minutes. Okay, now the hourly chart, on the hourly chart, if you kind of just take away all these lines here, and let's kind of start from scratch. And then you draw a trend line here just like that on the hourly chart. In my opinion, and this is obviously just my opinion, if we break down from this and confirm, so let me delete that. If we close below this bottom trend line and we have another candle, meaning within the first 2 hours, we confirm, meaning we close below the low of this candle, then I think this guy's breaking down. Okay, so I'm showing you the hourly because whenever I say I'm on the edge of 50-50, meaning it could go up or it could go down tomorrow, not tomorrow but on Monday, I have to look at the shorter time frames so it can give me a hint of what it's going to do before it does it on the daily. You know what I'm saying? So this is the hourly I should say. And so if you just draw a straight trend line just up like this, it's a nice trend line. So again, if we break down, I would say if we close below this 200 moving average and we close below that candle within the next 2 hours starting on Monday, then I think this thing may start coming down. Now again, just keep in mind QE3. Now technical analysis is great, but when you involve federal manipulation like QE3, Operation Twist, and all that stuff, you never can tell. So you just have to make sure that you kind of back yourself up in some sense, meaning a lot of times they'll get people long by shooting this thing high and then they'll just sell off, and just complete opposite. I'm sure I'm not the only one that sees this trend line here, right? So what they might do is sell it off within the first hour, and then everybody will go short because it broke down from this trend line, and then they'll pop it up higher. Okay, so just keep in mind that anytime you're in the money, and this is just my opinion, this is what I do. As soon as I'm in the money, there's absolutely no excuse for me to lose money. Okay, as soon as I'm in the money, I put a break-even stop, and if it stops me out, great. It's like I never took the trade anyway, but I should never be losing money once I'm in the money. Okay, that's just how I trade, and it's because I need to make sure that I'm protect myself from the manipulation that we always had. All right, now this is a chart of the dollar futures. Let me just kind of change this here. All right, this is the daily chart of the dollar futures. Let me just zoom in over here. And again, this is the thing the dollar I was talking about for the longest time here. I said we would have resistance right at this 20 moving average and this upper trend line here. We haven't yet hit this upper trend line just yet, but as you can see, the reason why the markets kind of pulled back was because the dollar went higher. And here is the key point about the dollar. We closed above this 200 moving average. Let me take after hours off. All right, there we go. So we closed above the 20 moving average. We have not yet hit this trend line here, but trend lines are not, to me, are not 100% accurate. Okay. In fact, where did this trend line go? How did I draw this? There we go. Trend lines are not 100% accurate, so to me, in my opinion, as long as you're close, this could be considered a tag. In fact, if I manipulated this line a little bit, I could probably make it hit. So what that tells me is, unless so what this tells me is there is some strength because we have closed above the 20 moving average. Okay, this bottom trend line here is a non-issue in my opinion. Okay, meaning I could just manipulate this line and just probably go like this and say, oh, okay, you know what, that's a hit, and look, it still matches up here. See, trend lines are not perfect, it's an art, right? Everybody knows that, and that's why everybody's trend lines are somewhat different. Let me just save this. Okay, so technically on a technical level, it's already hit this trend line, and that's probably why we got a bounce. We got a bounce right here, right where the 20 moving average met this trend line here. We got not a bounce but a pullback, and that makes sense to me. And then we went back up just like that, hit the trend line again, and then had a small intraday pullback. Here's the thing though, we closed above the 20 moving average. Okay, we hit the bottom trend line and we pulled back. If we close above this trend line here on Monday, that would confirm the close above the 20 moving average. Okay, you see that? Because if this trend line was in here, okay, and we just go based off of this close above the 20 moving average, then any confirmation above the high of this candle here would be a break of the 20 moving average, and I would then say the $80.61 mathematically calculated level would be the next stop. And then of course the 81.26 level would be the second stop where the 50 moving average should be coming down. Now keep in mind, this $80.61 level was actually created on this day here, which means this level here has already been used. Therefore, even if it is a resistance point, it may not be a very strong one, but if it gets into this 81.26 level, then I'll probably be going long on the market if it gets there. Okay, I'm not guarantee, nothing's guaranteed in life, but I'm pretty darn sure that I will be entering a long position on the SPY if the dollar gets to this 81.26. But that's a far ways more to go, so when that day comes, I'll make another video on it. So stepping back now, again, a close above this candle here on Monday would validate this close above this 20 moving average. However, a close above this bottom trend line, and then on Tuesday, if we close above the high of Monday's candle, that validates a close above this trend line, and therefore the $80.61 level is a lot more, how should I say, probable. Okay, so just keep that in mind. This is not an engulfing pattern in my opinion, because it's the wrong direction. We went higher, and this is a green candle engulfing the red candle. If this had been a green candle, or it doesn't matter, if this had been a red candle, then I would say we would have more downside. But again, looking at the SPY chart, it looks like a 50-50. Looking at the dollar chart, because it's right into this bottom trend line, but it did close above the 20 moving average, I would have to say that the dollar has a chance of going higher. And if the dollar goes higher, as we all know, it's inverse to the markets, and the market should pull back a little bit more. Whether or not the markets close below that bottom trend line is another question. Okay, So what am I saying? I'm saying that based on the charts and the charts alone, I'm not including QE3 or anything like that. Based on the charts, the SPY is right on the bottom of the trend line. That means 50-50. But the dollar has closed above the 20 moving average. It hasn't confirmed, but it's closed above the 20 moving average, which shows me the dollar has a little bit more strength. Say it didn't close above the 20 moving average, then I wouldn't think the dollar would have that much more strength, and it would probably be heading for the $70, 78, 74 level where it previously hit here, which was the bottom at 78.73. This would be considered a double bottom for a small bounce. However, because it closed above the 20 moving average, I would have to say that the markets um, I would have to be a little bit more bearish short term, very short term, on the market, simply because the dollar is showing some strength. But again, this is Monday. Monday is low volume, not to mention there's a lot of manipulation. So I would give it a 60-40 chance that we should see somewhat of a little bit more of a pullback, if not a flat day for Monday. And again, that's just based on what I see in the charts and nothing more. Okay. And to be honest, even if we do get some downside on Monday, it's going to be short-lived. I mean, I don't see the downside getting past this 141 level, to be honest, here. I mean, I think we're going to get a significant bounce if we even get there, okay? All right, one thing I want to show you guys is the USO. I've talked about the USO in the previous video simply because I said that a lot of times when oil goes down and markets are going up, it's signifying that the markets could be starting to pull back. That has happened in this case. All right, oil started pulling back and actually broke down from this bottom trend line. This is why I think trend lines are so powerful. But after it broke down from the trend line, but the markets were still going higher, that's when, you know, I kind of thought, well, there's a higher possibility. See, this is a business of probabilities, right? You have to look at your odds, right? And because USO pulled back, and you know the markets created that shooting star and it was right into that mathematically calculated level, there's a pretty good guess that the markets would have pulled back. The only thing that was keeping me on edge was that QE3 announcement. But because the QE3 announcement is open-ended, you know, it's like drugs, right? If you take, you know, if you know, I don't do drugs, but let's just say, you know, you smoke or you sniff a certain amount of drugs all the time, your body's going to get acclimated to it and you're going to be used to it, and in order to get a high, you're going to have to take more drugs, right? But right now with QE1, QE2, and QE3 and so on and so forth, every time someone hears QE1 it started off QE1, so every time someone hears QE or some sort of quantitative easing, it's like the markets will get a high and everybody starts getting buying in, right? But because QE3 is open-ended, there will be no QE4, right? Unless they make another Operation Twist, or they just name something else, name something different. But basically, the word QE is done at number 3 because QE3 is open-ended, so there is no QE4. Therefore, everybody's going to get acclimated to QE3 and how much billions of dollars they're already be printing and devaluing the dollar, which basically means everybody's going to get used to it. And you know, we may have a correction soon. I don't think it's going to be a big correction, but a correction. And that's actually a good thing for the markets. You want to see pullbacks, you want to see corrections, because that's actually a healthy thing for a market. In any case, I discussed the USO in the previous video. I had this level here at $33.11. The low of this candle was actually $32.98, so I was off quite a bit. Actually, this was about 13 cents off, but as you can see, the close of this candle was actually at 33.34. So if you had bought the USO at 33.11, as indicated in the previous videos, let's just zoom in here. The close on Friday was 34.12, which means that's a dollar profit already. So if you had bought USO at the USO at 33.11, I would already have a break-even stop. If not, you can just sell everything. If you don't want to sell everything, then just at least sell half or 3/4 of it or whatever, because it did create this doji candle. It didn't create it on higher volume, but you also have all these moving averages over it. So basically, if you're long USO, you're doing a counter trend trade. Why? Because we have this down, we have up, and we have all these moving averages here. This ETF is showing weakness for it to possibly come back down again. So just keep your eye on that. If you're already in the money on the USO, if you picked up USO at 33.11, then you should be in a pretty good solid state. If you want to hold it right now, just have a break-even stop just to protect yourself. And again, you don't have to. It's just my opinion, okay? And this is my calculated level here in case you're wondering what that line was. And so if you just draw a line here, it almost got there, but it didn't quite get there. And I got this line again. This is what I normally do, but this is just to give you an example of how I determine price from a breakdown and from a wedge pattern. Is I grab the pivot point of the middle of the wedge. Actually, this would be a little bit down here, just like that. So pivot point in the middle of the wedge pattern, and then what I do is I put it right at the breakdown of the candle, and then there you have it. Actually, if let me just zoom in here, and you'll see that wow, it actually hit it right there. Amazing. Okay, so that's what I do. In any case, geez, I'm already in 20 minutes, and I said that this video would be a quick video. In any case, you know what? I hope all of you guys are making a lot of money. Good luck to you guys all. Have a great weekend. God bless to everybody, and I hope to see you in the next video. And thank you very much for stopping by.